One of the things I've been questioning with Rivian is, does the company have enough demand for the supply that it's building for vehicles? If you're making 50,000 vehicles per year, that's basically what Rivian is making, you should have ample demand for that kind of product, for that volume of product. But it doesn't seem that Rivian has that. And we recently saw that the company is now discounting model 2023 and 2024 vehicles in anticipation of the next model for 2025. There are some upgrades coming, and it's not uncommon for automakers to discount a little bit older vehicles. But if you're discounting vehicles in inventory, it means that there are vehicles in inventory, and Rivian shouldn't have vehicles in inventory. There shouldn't be that many vehicles in inventory for a company that's only making 50 or 60,000 vehicles per year. These vehicles should be selling like hotcakes, and they're just not. And this is the fundamental problem that Rivian is facing, is I don't see there being enough demand for the R1, for the R1S and the R1T at the current price point, even though they're losing $38,000 on every single vehicle that they make. And then looking forward to R2, are they going to be able to drum up enough demand for R2 at a $45,000 plus price point when there are a bunch of new vehicles coming to the market with better range at a lower price and a very, very similar size? I know in a previous video, I got a lot of pushback saying, well, this is going to be more like a Jeep vehicle. They go for a premium. Maybe you should compare it more to a BMW. Those are niche manufacturers. And what Rivian is saying is they want to go mass market, but you can't go mass market with a very, very expensive vehicle. And you can't go mass market if you can't produce your vehicles at a profit, because you won't survive. And this is the fundamental tension that Rivian is facing. The stock has actually gone up recently because of a lot of protectionism in the US. There's not going to be, it looks like there's going to be 100% tariffs on vehicles coming in from China. So a lot of those Chinese competitors probably aren't going to make it to the US. But all the US competitors are here. They're here now. Kia just announced a new vehicle. GM's EVs are hitting the road. There is a lot of competition coming to the market. And the first sign of trouble is when a company starts discounting their vehicles. When did Tesla start discounting their vehicles? December 2022. When did their margins start dropping like a rock? December 2022. Over the past year and a half, Tesla's margins have steadily been on the decline. And it's because their prices are coming down. If Rivian is facing the same headwind, we're going to see their financials get even worse, and they're starting from a worse starting point. So I'm going to dig into exactly what we found out, at least over the past week, with some of their discounts. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to the reporting for this week. This is from Auto Evolution, although I've seen this reported in a number of different places, particularly the people that follow Rivian very closely on Twitter. You can see that Rivian is starting to prep sales for the revamped R1T and R1S this summer. The biggest discounts that they're offering are discounts to some of the upgrades. Quad motor and large battery pack costs $2,000 less, while the max battery pack, which is the battery pack that gets you to 400 mile range, is $4,000 cheaper. I looked at inventory and there's only actually a few $1,000 difference between a standard R1T and a max pack R1T. So it seems like a really compelling deal. But the downside of that is if you are Rivian, you're going to be making less money on these vehicles. They also said here that people who had ordered vehicles recently or closed deals recently were being contacted by Rivian to actually give the discounts that are now available. So that's the right thing to do for a manufacturer, but makes it harder to make money because your margins are going to be lower on those sales. The other big change over the past couple of years is the amount of vehicles that are available. This is the available inventory for R1Ts in my area. You can see that there is a ton of options going down to the $70,000 price point. And here you see this 410 mile range. If we look at the R1S, you see similar things. Lots of vehicles available, delivery in 1 to 4 weeks. That used to be over a year. I know that when I was on the reservation list, they kept pushing us back, but now all those reservation holders apparently have canceled because they used to have well over 100,000 reservation holders, and they have not delivered that many vehicles. So this is what's really concerning, is once you get to the point where you're building inventory and you have to discount that inventory, that means that you have a mismatch between supply and demand. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This wouldn't normally be a huge deal here. But you can see here that Rivian is only producing about 50 to 60,000 vehicles per year. And this ramp is not going all that quickly compared to what we thought was going to happen when the company went public. At the same time, the company is burning through billions and billions of dollars worth of cash. This chart shows cash burn just from operations. This is not capital expenditures. This is just operations. More than $4.5 billion worth of annualized cash burn. Now, this should come down as the company institutes some cost cuts, both on the manufacturing plant, but also in operating expenses. So maybe this number will get a little bit smaller, but production is not expected to increase in 2024 based on Rivian's guidance. So this isn't going to improve all that much. And the balance sheet is getting strained. You can see here that Rivian's cash has been dwindling quarter after quarter after quarter, while debt is actually increasing. Give it another couple quarters and debt is likely going to exceed cash. Rivian may actually have to raise cash sometime in the next year just to keep its operations going. Because remember, we're upgrading the plant for R1T and R1S upgrades in 2024. And you're also building out production for the R2, which is going to be in the same Normal, Illinois facility. All of this stuff takes money. And when your current operations, when sales of existing vehicles are costing you $38,000 for every single vehicle that you sell, some of that is non-cash costs. Some of those are one-time costs. But even if you pull all of those things out, Rivian is losing at least $10,000 per vehicle sold. And now that's before they were discounting vehicles. Now they're discounting vehicles that they're holding in inventory. Are they going to have any pricing power in later 2024 when these new upgraded vehicles come out? I don't think that's going to be the case. We're seeing more discounting from competitors. We're seeing discounting through financing options, whether that's leases or loans. That's something that automakers have to indirectly pay for, but it is a real cost for them. And so Rivian is still losing money and just hasn't reached scale. You're not going to be able to scale and get to profitability as a business for Rivian at the Normal, Illinois facility with a little over 200,000 units of production. It's just the math just doesn't work. Just from their operating expenses of nearly $1 billion per quarter. So there are all these little red flags that come up with Rivian. And the latest one to come up is the fact that they've had to discount 2023, model year 2023 and 2024 vehicles to get them out of inventory. That's not a good sign. It's not a good sign that there is inventory at all for a company like Rivian, because at this low level of production, you should be able to sell absolutely everything that you make. But that's clearly not the case with Rivian. Another sign that this is not a stock to be investing in today. But what do you think about Rivian? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.